Hello everyone, welcome back to Be Rich. I am Alvin Nimalraj, research scholar at Lala College, Chennai. So, in the last 1 month, the Nifty has raised about 2.5 percentage, and in the last 6 months, the Nifty index have increased about 13.5. So, in the last video, we just discussed about the interview that Nikhil Kamath, the founder of Zerodha, has given to Mint. Like he has said that as of now, the Indian stock market has overvalued, and he has asked the retail investors not to buy any stocks. But we have an investment opportunity now. The IT index fund. The IT index fund have dropped by nearly 15 percentage, even though the market has increased, has soared up. So the IT index fund or the ITBs have dropped from a 52-week high of from 36 to 31, and this is a very big investment opportunity. And we are expecting that this IT index fund will further decrease due to three major reasons, and that we are going to discuss in this video. This content is also available in Tamil in our own MoneyPage YouTube channel, and the link for that video is given in the description below. So, first we'll discuss about the three reasons why we are asking you or why we are suggesting to get into IT index fund. And that's a chance for further dip in this IT index fund because the US markets are predicting that the recession will come in the mid year of 2023, and there will be a further dip in the IT index as well. No one can buy IT index fund at their bottom point. No one can catch a falling knife at the bottom point. So we can accumulate in small quantities now and then. So now we'll see why we are suggesting you to buy a IT index fund. First reason, the Indian rupee is weakening against the US dollar. As of today, the Indian rupee against the US dollar is nearly 82.5 rupees, and we are predicting that it will reach up to 85 rupees in the near future. And another important thing, the RBI is selling its forex, and in the future, in the next 2 years, there will be a shortage in the forex reserve in India. And because of this, Indian rupee will fall even more drastically. So the companies that are earning in forex, or the companies that are earning you in USD, they will be benefited because of this rupee depreciation. And experts have predicted that the Indian current account deficit would be greater than 3% in the coming year, and the government experts have also agreed to this point, and this will put on an enormous pressure in the rupee as well. So in the near future, the IT companies that are generating revenue in terms of US dollars will be benefited by this fall in rupee value. The second reason is the fear of recession that is happening in the US market. But last week, a report has been released in the US claiming that the service performance in the US in the past 3 months have performed exceptionally well. This is a shocking news for the entire US market segment because they were expecting a recession. Recession is nothing but the negative growth for 2 consecutive quarters. But this report have said that the service performance in the US in the last 3 months have performed really well, which means their market is booming only. So there is no point that recession will happen in the near future, because in this Christmas season there'll be a lot of shopping, there'll be a lot of travel, and the service industry will boom. And one more major thing is US market is majorly driven by services and not by manufacturing. So when there is a chance of increase in service or increase in service performance, the scenario for recession will drastically fade away. And expecting this recession only, the IT companies or the IT index in India have fallen to a great extent. But the opposite thing is happening now. So this is the second reason. They are expecting a recession, but the opposite thing is happening now. The US market is booming only. The third reason is that the minimal rise in employee cost. As we have witnessed that the new age IT companies in India have laid off thousands of employees, but the top IT companies like TCS, Wipro, Infosys, they haven't laid off a lot. They have laid off some 5,000 to 10,000 employees, but they have a larger chunk of employees. So there won't be any talent crunch or talent shortage in running their business. And increment that they pay to these employees will be considerably less in the next year, because the employees will accept a minimal level of income rise rather than being laid off. So the profit for the company will come in three ways now. First, there can be a increase in profit due to their business operation. Second, an indirect method is the weakening of Indian rupee, because they will be getting in USD. Because of weakening of Indian rupee, they'll be profited. Third one, the employee cost would be drastically reduced in the upcoming quarter or upcoming year. So the profits of IT companies will see a rise. So as of now, Tech Mahindra as well as Wipro, you can accumulate these stocks because they have fallen by nearly 40 to 45% from that 52-week high. So we can accumulate these two stocks. Another thing, L&T. L&T has announced its merger with Mindtree and two other companies. So post-merger, L&T will be relisting in the market, and after that we'll have to witness whether they'll be coming in the top 5 spot. Like first one TCS, next Infosys, Tech Mahindra, Wipro, and we'll see whether L&T will attain the 5th spot in the IT segment. So whether or not to buy this stock at the moment, we are not going to discuss. In the future, post merger, we'll discuss whether we can buy L&T or not. Another important news for today is the gold price. The gold price is in an uptrend in India. Even when there is no change in the international market in gold prices, due to weakening of Indian rupee, the gold prices have seen an increase. So stocks like Titan, Kalyan Jewellers and Tangamail have performed really well in the last quarter or in the last year. But as of now, Tangamail is highly overvalued and Titan is also very expensive. You can get Kalyan Jewellers only if the stocks go below 100 rupees. Other than that, let's wait for these stocks to dip further. The last thing that we are going to discuss is about the crude oil. The crude oil prices have fallen from $95 per barrel. Now it is around $80 to $81 per barrel. But this benefit has not yet reached the end consumers. So let's see what happens in the future, whether the government is going to cut short the prices to benefit the end consumers or not. So the stocks that we have discussed today, you can consult with a SEBI registered advisor before making any value investment. Thank you for watching this video. If you like this content, click on the like button, subscribe our channel and refer to your friends and families as well. And don't forget to click on the bell notification as well. Thank you all.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.